Hello, welcome to this afternoon's webinar. I can see the participants streaming in, so that's great. We just wait for people to come in from the waiting room. As we're waiting, I'm hoping that the chat function is available to you today, and for these webinars, we like to get a little bit of feedback from people straight away. So we're going to ask you, it's only a month till Christmas now, so we thought we'd ask you what your favorite thing about Christmas might be. So if you want to put anything into the chat to all panelists and attendees, any thoughts you have on your favorite things for Christmas. I was going to ask, what's your favorite tractor? But I was overruled by my colleagues that that wasn't the right question to ask. But I was reliably informed yesterday on another webinar that I was chairing by a radio interviewer who knows about these things, asking about favorite tractors is a good icebreaker and a good way to get feedback from people. So I see we've got something in the Q&A. It's saying chat is disabled. I don't know. Somebody, yeah, I'm not sure. I'm sorry, Penny. I don't know why chat's disabled. It looks like it's enabled from this side. So if you want to put your favorite thing about Christmas in the Q&A, then go for that. I see Vanessa in practice development has put mince pies down in the chat, but maybe delegates can't get to that. But feel free to share your thoughts with us. So we're creeping up to about 58 at the moment. Just wait for a couple more people to come in. Oh, I got some. Ah, excellent. Massey Ferguson. Very good, Sally. Thank you. Mine was David Brown. I don't know if anybody remembers David Brown's, but it's the old white tractors. You don't get many of them around anymore. We've got celebration chocolates. Yep. Christmas Eve from Helen. Interesting. So you like all the anticipation, but then you actually get to Christmas Day, and perhaps it's all the anticipation is the bubble is burst. New socks from Paul. Very good. I see people have lots of creativity when they think of you and Christmas time. And Yvonne, time with family. Yes, let's hope that some of us manage to get some of that this Christmas. So great, that's shopping and giving gifts. When Sally's too young for David Brown's, I suppose. Is that some time off from Lindsay? Yep. Black cake. Interesting. Not quite sure what to. Is that a special sort of Christmas cake, Karen? Not quite sure what you mean with that, but cake is good at Christmas time, though sometimes we forget to have it in our household. So much other good food. Okay. Oh, filled with rum. I see. Yep, I can see why you like that, and maybe black cake filled with rum is good for Christmas, but not for other times of the year. Okay, so what we'll do. Thank you very much for putting some comments in there, letting us know that we've got a live audience listening to us. We won't talk much more about Christmas now, but what we are going to talk a bit about is what we think fundraising will look like in 2021. So we're going to skip Christmas and move over into the new year. But before I kick off, just to introduce myself, I'm Dan Fletcher, heading up the fundraising consultancy part of Moore Kingston Smith Fundraising and Management. And I'll just introduce my colleague Emma, who's also going to be speaking to us a bit later. So Emma, do you want to tell us what your favorite thing about Christmas is, and maybe a little bit more about yourself?
Sure. So I'm Emma Ullman. I've been with Moore Kingston Smith now for about 10 months, but prior to that I have been in-house in a variety of different roles within fundraising, predominantly within sort of events and community type work. And for me, one of the best things about Christmas, well, it's all about the food for me, and I quite like a twiglet, which I'm probably showing my age. I'm probably showing my age now in terms of, well, I think you can still get twiglets, but it reminds me of when I was kind of younger, and my mum used to get a big sort of tube container of twiglets for Christmas, and it was a treat for us to have them. So yeah. That's up on my list for Christmas, amongst other types of food.
Twiglets reminds me of Mr. Bean and
Oh,
wanting to have some twiglets, and he didn't have any, so he got some twigs and drew some little black bits on them and presented those in one of the Mr. Beans. But anyway, that's by the by. So okay, so we're going to be thinking about what fundraising looks like in 2021, and hopefully coming up here is a bit of a route map of what we're going to talk to you about this afternoon over the next hour or so. I'm going to give a quick introduction, looking at where we are now, status in 2020, and then hand over to Emma, who's going to make some predictions and then think about how we can respond to those predictions and pivot our fundraising. Obviously, we aren't clairvoyants, we're not futurologists. We don't know what's going to happen in 2021, but we're just looking at some of the signs that we've seen at the moment and some of the things that we're aware of from other fundraisers, charities that we're working with, and other commentators, and we tried to pull some of that together to create something useful for you to understand how you might need to respond in the coming months. But just I'm going to start off with just a few introductory slides. So very briefly, this is a bit about Moore Kingston Smith. As many of you may know, we're part of the fundraising and management team as part of the larger Moore Kingston Smith group, a group of accountants and business advisors, and we do a lot within the charity sector and regularly voted #1 in Charity Finance's survey for charity expertise, which we're very proud of. And I think that survey is coming up again. The results are coming out soon, so fingers crossed that we'll stay in the pole position. The fundraising and management team comprises these 7 people. You can see Emma and myself there on the slide, and then our other colleagues deal with financial management and impact management. And we're very happy to talk to anybody about ways that we may be able to help you develop your charity's work with finances, with impact, with fundraising, or the intersection where they all join sort of impact-led strategy work. Just a little bit of plug for things coming up. And things that we've put out there recently, some useful resources on the right of this slide, and you'll get links through to all of these in the follow-up email that you'll get with a copy of these slides later on. And then we've got another a short webinar that we're doing in December at the Charity Finance Group conference. So for any of you who are going to that event, there'll be something about lockdown learnings at that conference, and we're working on another webinar that we may be able to do in December as well, but we're just finalizing details of that. So hopefully you may find out about information about that through an email shortly. And then into 2021 we will be doing more webinars and also putting some training days together, which we hope will be useful to you. So watch for the emails and sign up when you see those. Just just a quick plug as well for Twitter, and the hashtag MKSFM Let's Talk is one which we like people to use when they're listening to our presentations, if they want to tweet about them either during the presentations or afterwards. So if you curate your tweet with that hashtag, then we'll see it quite easily, and we may be able to then retweet that as well, or that helps you to be able to interact with other people who are tweeting about the same thing whilst you're listening to us talk. So do get on Twitter and talk as we're talking. And now I'm just going to then move on into thinking about some of the issues around where we are at the moment, and what the sort of current status is. So the first slide that I want to go through, just to introduce where we are, is this curve, which I've used in a couple of webinars already, but I thought it would be helpful just to come back to that and see how time has progressed, and where we are now, and whether the predictions are still remaining true. And so the idea with this this curve is that this mark here, where the star is the point of a crisis. and the blue line reflects what happens to general charitable income in response or following a crisis. Maybe it dips momentarily when the crisis happens, then it often goes up, and maybe goes up quite steeply, and then it may stay up for a while, and then at some point it starts going down again. And that is true. That is, or that has been true of this particular crisis. It's been true of other previous crises. Sort of most notably, perhaps the the crash in 2008, 2009. Which obviously was an economic and mainly an economic crisis, but it also happens with other crises, which are sort of more humanitarian disasters as well, which affect people. So the crisis happens, the curve goes up, and we've seen with this one that there's been a sort of a predicted 800 million or so additional pounds donated to charities, potentially as a result of this crisis, and as a result of people's awareness of the need to support charities and to help charities. And now I understand there's some controversy around this figure, but I think CAF are reasonably sure of some resilience behind and robustness behind their analysis. And certainly anecdotally, lots of charities have talked about the fact that appeals that they've put out in the first half of the year were very successful. They exceeded their expectations. And they raise more money than they may be expected to. And that doesn't mask the fact that charities are also saying that the demand for their services has gone up hugely, and there is a gap across the board of maybe over 10 billion between what it's costing charities to deliver services during this coronavirus, this pandemic year, and the amount of money that they're receiving, particularly because in other forms, some of the money that they might have received is going down in terms of events income, going down in terms of retail and shops income in particular. But all the same, we have noticed, and other charities have told us, that there has been an increase in individual giving, and to that sort of magnitude. So further on with the curve, we do see that eventually when the crisis comes off the news agenda, things do start to go down again. The amount of money that charities are receiving does go down, and it goes down to a lower amount than it would have done pre-crisis. And then that trough carries on for a period of time. We can't predict how long that trough is going to go on for, or sort of how deep that trough might be. Certainly, the Chancellor's announcements yesterday suggest that sort of there's the sort of recessionary impact will be going on till 2024, and potentially sort of beyond that. So we're talking about a long trough, not just a short one. But at some point, things do pick up again, and income rises, and hopefully the income rises at a higher rate if charities have been looking after their donors, and if they've been supporting their donors, and are able to survive through the crisis. However, there is also the lower line there, which represents what happens to charities that maybe don't respond as well to the crisis, and don't do all the things that they maybe should do, don't engage with their donors, don't ask for enough for funds, and then they end up in a deeper recessionary period, a longer recessionary period, and they never really recover to the same lengths that they were prior to the crisis. So it's a positive tale eventually, or a negative one, depending on what the charities' responses are. But this is a sort of the context that we think that we're in, and as we go on to predict things for 2021, remember this graph and where we are within that, probably around about the first or second of those gold coins there. So moving on to think about things that you need to be looking to and trying to interpret in order to guess how things are going to turn out in the coming months. And so with that, obviously the issues around unemployment and the sort of linked recession are going to be probably the gravest ones. Those obviously affect two things. They affect disposable income, and they also affect the amount of taxes that are raised, and the amount of benefit that goes out to support people who are unemployed. And both those things have a negative effect on charitable donations. However, there is this sort of suspended animation from the furlough scheme. So whilst unemployment levels have risen and will continue to rise, at the end of March may be a cliff face that is even more problematic when unemployment may rise much further. And certainly how the furlough rolls out and looking after that time are things which we need to be very aware of when it comes to think about the impact on our own charity's ability to fundraise. The next thing, we should have a question mark next to it. I've called it austerity 2.0. We had austerity 1.0, George Osborne's austerity after the crash of 2008, 2009. And that was very much a very harsh austerity, lots of cuts, little investment in things, in big projects, in infrastructure projects, little sign of government wanting to do big things, and more sign of government contracting and allowing private forces to sort of take effect. It may be different this time around. It's hard to completely tell. Certainly, yesterday's statement from Rishi Sunak indicated that there was to be expenditure in a big infrastructure budget, money borrowing, or the government borrowing money in order to spend its way out of the crisis to some extent, maybe not to the full extent that it's been talking about in previous months, but it is different to the last time around. So we need to watch how that pans out and what that means for our charities. The next thing is to also, another barometer is the amount and the cost of borrowing, and borrowing is very cheap at the moment, which is why the government feels confident to try to borrow lots, a huge proportion of GDP. If that cost of borrowing goes up, then that will have a significant negative impact. If the cost of borrowing stays low, then that means that they can continue to borrow lots and potentially spend their way out of recession, which has a positive, potentially a positive impact on getting out of recession, on the government employing people to deliver those infrastructure projects, wages in people's pockets, ability to make donations through disposable income. All those things would be positive for our fundraising activities. And then the last three are all sort of unknowns to some extent, but we know these things are going to happen at some point. There will be a vaccine, and that will have a positive effect at some point in the future. Whether it's Easter, whether it's later, whether it really when it really takes effect, we don't know. But that's something we definitely need to watch, and has a clear impact on how stock markets move, as we've seen in recent weeks. Brexit will happen, or has happened, and the impact of the transitionary period will happen next year. So we need to see how that pans out for what our charities can do, and how that affects people's confidence in the economy and their ability to give. And then across the water, I know, but Biden, as the new president of the US, when he takes office and starts to act and to change the way the US interacts with the rest of the world, that will have an impact on us as well. It will impact trade. It will impact potentially other things within the world economy, which will affect our own fortunes as well. So all of those things are key factors to consider. I can't necessarily predict how they're going to go, but those are things we need to think about for our fundraising sort of strategies longer term. So moving back to some things, sort of more details, more things that we do know about. Last month, we ran a survey asking charities about what things that have happened to them during the lockdown period, what they've learned, how things have changed. And we had lots of interesting results in that survey, mixed results. And the graph below shows what charities were saying, what had happened in terms of their fundraising income. There were lots of other questions around finance and around impact as well, and we've produced a short document summarising the findings and bringing in some other insights that we've had from other work that we've done with charities. So we'll be releasing that following this webinar. So in the email that you'll get, there'll be a link to that document, and you'll be able to read that at your own leisure. Probably either later tomorrow or Monday. But just this sort of snapshot on fundraising income, really mixed. There was clearly, nearly 25% of charities were saying their income was up. The equal amount of charities saying their income had dropped by more than 25%, which is a huge amount, highly significant, clearly highly problematic for that charity's future activities. So a wide range of impacts. We did see that there was a correlation between the sort of the changes that this graph shows and where charities were with their fundraising strategies. Those that were keeping their strategies current and that were adapting them to the new sort of normal that they're engaging with were ones that were more confident and were seeing their income rising. And so some of the things that Emma will talk about later on will be things that you can think about for your fundraising strategy and how you can maybe adapt your strategy to take advantage of that. We also saw that there was a link between charities that didn't really have a new case of support, who hadn't really thought about repositioning what they do for this year and all the changes that are happening and will continue to happen. So charities that hadn't done that were the ones that were most concerned about surviving as a result of the pandemic. Those that were tweaking their case of support, making it current and adapting it were the ones that were more confident and the ones that were able to ride the storm better. There were lots more insights, as I said, from the survey. So do look at the document that we'll be sending out following on from this webinar, and we did a webinar 2 weeks ago as well, which you'll also be able to look at the recording of if you want to see some of the other insights from there. So thinking about cases for support now, before I move on and give Emma a chance to talk. Just wanted to bring up this one about coming back to basics, not forgetting the basics. We're talking about new normals, we're talking about lots of change, but there are some basics that we need to stick to as well. And the case of support is one of those, and keeping your case for support current. It was a clear indicator that indicated success for charities in the survey that we took, and we see that with other clients that we're working with. And so I've just got this little example from Darth Vader here, who I think exemplifies some of the things that you should be thinking about. I'll just read it out if you're not able to see what it says on the screen. He's holding up a cardboard sign that says, "Help me, I am a disabled Clone War vet, need dollars, actually lots of dollars, to build Death Star." So he's being clear about the support that he needs. He needs lots of money, and he's also clear about why he needs it. He's a disabled war vet from the Clone War, admittedly, which is one that fewer people are familiar with, but there you go. He's also articulating the change that support will bring with the dollars that people give him that will help him to build a Death Star. So he's maybe he's not explaining too much what the Death Star will do, but I think it's fairly it sort of speaks for itself, doesn't it? And certainly anybody who understands Star Wars knows what that means. And so he's articulating the change that the support will bring, and he keeps communicating with his donors. He's out there. He's got a sign. He's out in the public space where people can read that sign. And I'm sure if anybody stopped and talked to him, he would also tell them a bit more about the support that could be given. Now, I'm going to skip over some of the issues around ethics and asking for money for the right things that you can actually deliver, because that sort of spoils the analogy here. But I don't really need to say it. But I think in other ways, this little example is a good way to remind us to not forget the basics in the fundraising that we're doing, and those things will help us as we also adapt to the things that we need to change with moving forwards. So I'm going to click forward and hand over to Emma, who's going to try to predict a few things for the next year and
Get my crystal
suggest
ball
ways we
out.
can respond. So over to you, Emma.
Hi, Dan. Thanks for that. I'm just wondering if now's a good time to admit that I've never seen Star Wars, which is,
No.
I know, I get that
Okay.
often. Yeah, it sort of passed me by. So yeah. Anyway, maybe it will happen one day.
We'll have to have a
But
Star Wars-a-thon in the office at some point.
maybe. So thanks very much for that, Dan. I am going to use my section to look at some general predictions for how we see fundraising next year, given everything we know at this point in time, and some of the content that Dan shared within his presentation. And I'm going to do this using something called the wealth, warmth and access model. So that's brilliant, Dan. So you should be able to see the model on the screen there. And some of you fundraisers may already be familiar with this, because I mean, it's used quite often within the sort of major donor world when applying for your sort of individual giving strategy, but this can be used in all types of fundraising for groups too as well. And just to explain the model for any of you out there that are unfamiliar with it, the theory is that there really are 3 areas that are interlinked, and if you have all 3 areas together, then in theory your fundraising is going to be much more successful. And that's not to say having weaknesses in 1 or 2 areas, it doesn't mean your fundraising will fail completely, but we do think it's going to be a bit harder. So it's important to try and focus your efforts where all these 3 areas are sort of score highly, so you can create some really good fundraising outcomes. So just to give a sort of quick definition of the 3 areas for the purpose of my presentation today. Wealth is all about the giving capacity of your potential donors. Warmth is all about how engaged your supporter base is. So what's the general public mood concerning giving to charities at the current moment in time? And access, that's about, can you get to people easily? Are there any barriers in the way? Do you have all of their names and addresses, for example, that kind of thing? And this model will be of use to us as I'm going to predict basically how each area will fare next year. And then I'm going to look at actually how can you take advantage of an area that might be faring quite well and you can maximize those opportunities, or how you can overcome any obstacles in areas that we believe are going to see a bit of a decline. So if we move on to the next slide. So looking at my predictions. So firstly, I wanted to start with wealth, which is perhaps the most obvious one. Generally, the outlook in wealth is that it's declining, as Dan sort of conveyed within his graph there. And the general downturn does look set to continue next year, with sort of more job losses predicted. Meaning there'll be less disposable cash around, furlough ending, etc. However, one caveat I would put in this area is that there will be a subsection of society who will actually have sort of done okay during this year, and may well do okay next year as well, and they'll actually have potentially a bit more disposable income than they would have sort of before COVID. They may be recently retired or in well-paid work. Their general living costs may have gone down because there's lower travel costs. They don't have as many opportunities to go out and spend money on entertainment and holidays, that kind of thing. And there may also be a sense of obligation for these people to give to charities because of the plight of others around them. And actually, we were listening to a webinar this morning, which was really interesting statistics saying that there are actually 3.4 million high earning adults who have benefited from COVID financially, compared to 4.6 million who are worse off. Now, obviously, 4.6 million is a huge amount of people, which is obviously tragic. But there isn't a huge disparity between those who have done okay and those who haven't. So those 3.6 million represent a huge number of prospects for us in the third sector. And in fact, now may be the time to give, because it may actually help people feel in control Given there have been many times this year, and I'm sure it will continue next year, where it's you sort of feel out of control with the situation, and being able to kind of give to a charity can give them some of that control back. Which brings me nicely onto my next point about warmth. So warmth, we think the outlook here is really positive, and areas where charities can really maximise and increase their fundraising. And we believe that the public will continue to have empathy for charities, given the work they're doing to support those affected by COVID. For example, the huge increase we saw earlier on in this year for NHS charities, alongside the widespread media attention there's been on the reduction of charity income due to things like cancelling of events. And in addition, we believe there'll still be that sense of community spirit that we've all benefited from this year. This idea of we're all in this together, and how can we help each other, especially within sort of local communities. And supporters ultimately won't want charities to fail because of COVID. There's that real sense of support there. And really the question for fundraisers out there is, how do we capitalise on all that goodwill in 2021? And we can talk about that a little bit more in the next section. Now, thirdly, access. Now we believe that will be continued to be limited next year because of the obvious social distancing obstacles that we've had to deal with this year, and we believe we'll have to continue to deal with in 2021. Face-to-face donor cultivation events, donor visits, mass participation events will all be affected. And even if a vaccine rolls out sort of by Easter, much more time will be needed to rebuild infrastructure to return to that sort of sense of normality. And donors may want different things from when we go back to being able to meet face to face anyway, and we do need to consider that. So how can we continue to overcome these barriers and ideally learn from some of the new ways of doing things when we hopefully get back to being a bit more face to face? And we'll go through that in the next section. So this section really is about how we pivot fundraising. So how do we make the most of those opportunities and overcome some of those obstacles to maximise fundraising return? So if we want to move on to the next slide. So let's start with access, and I'll explain the photos in a minute to give it a bit more context. It probably looks a bit odd to everyone at the moment. We went through the obvious issues with access in that it's limited because of social distancing issues, but what can we do to overcome this, and what opportunities are we presented with? So I think the first limitation concerns the ability to run and consequently raise funds via sort of those traditional established face-to-face events. And how can charities pivot the event to create an enjoyable user experience that meets income expectations next year if those social distancing rules still apply? And for me, this is about creating a great user experience that in some ways mimics or provides as much enjoyment as someone doing something in the comfort of their own home, or pounding the streets of their local park on their own, or with a few friends, as that photo suggests. And you can do this by if you haven't already done so, you can do this by creating great social media campaigns around a virtual event, encouraging content from everyone taking part, so they really feel like there's something they're part of something much bigger. So you're kind of trying to recreate that mass participation buzz. And the London Marathon this year was able to do this really well, and they mimicked that on the day buzz by encouraging lots of real life content throughout the marathon day. So the picture there on the top right is a picture of me cheering on a friend on marathon day, who ran 55 laps of our local park in the pouring rain, and it was just me and a few friends that cheered her on and did a few laps with her. But because of the whole social media buzz around the London Marathon, she felt like she was part of something much bigger, and I actually think raised as much money as she would have if she'd have done it on marathon day in normal times. So for everyone out there, think about what other events that you have. Could you do the same and pivot some of your events rather than just sort of cancelling for next year? think about a campaign which will make people feel the same connection and buzz they would do on race day, or if it's a different event. A second point which I wanted to talk about regarding access limitation is it's forced many of us to offer events remotely, which we would never have considered doing before. And for some, these changes will, suit for the longer term when we are back being able to have the option of running face-to-face events. So, I'm not suggesting that you go out and convert everything to virtual long term, as there's still a real need for face-to-face. In fact, there'll probably be a real thirst for it when we come out of lockdown. However, we have learned that virtual events have removed geographical barriers, creating, a whole new group of supporters. So, for example, a local hospice who organise a traditional face-to-face run, may not have attracted supporters from the other side of the country in the absence of a virtual sort of platform because of travel. But having a virtual aspect just really opens up more potential donors. So, it might be worth thinking about keeping some of those virtual aspects of an event moving forward. So you're creating a kind of hybrid event, or you're at least asking your donors what they would like moving forward, because ultimately you potentially could increase the number of people that take part, and you're increasing your audience. So the next example concerns a carol concert for a charity I used to work for, actually. Now, they have pivoted their traditional face-to-face carol concert to one being delivered virtually. And this has made it much more accessible. So it's many poor people who don't have to come to central London are now being able to be part of this event. And it's been really popular because the charity is a national charity. I'd also say that the caliber of celebrity involvement has gone up. And I think perhaps that's because there's sort of no travel involved, which in turn has generated more ticket sales because the caliber of celebrity is up on previous years. And in the same vein as the London Marathon, what events could be adapted so that they are virtual, for the time that social distancing will still exist in 2021. So if you think about that and think about adapting things and not making the geographic location limiting to people that might want to take part. Now, some issues around sort of these virtual events is how do you monetize them? And I just wanted to share an example of an organisation that it feels like they're doing that quite well. So the Lord Mayor's Appeal Carol Concert this year is charging a fee. It's a lower fee than normal. It's £5 per person coming along, but it's also asking people to invite 5 friends too. So supporters can either ask their friends to pay £5 each, or they can donate £25 for their friends to come. So they feel like they're kind of making a difference and making more money for the charity. And asking 5 friends to pay £5 isn't an off-putting request, so many people will be able to do that. So that's a good example of being able to kind of monetize those events that are virtual. And on similar lines and staying with access, what new events, so Dan, just looking at the next slide, can you put within your portfolio that lend itself to the situation? So, the pandemic has led some charities to create brand new fundraising events they may never have considered, and as a result, they've actually increased their reach. So I'm sure all of you have heard of the 2.6 challenge, which raised over 11 million this year and was a concept taken forward by many independent charities. And in the major donor world, it's probably worth thinking about, exclusive events that can be done online. And I know of some orchestras that have been arranging exclusive recitals for major donors this year. And lastly, another example there is around a brand new comedy event that happened at a venue quite near me that was online, that had record attendance and raised the awareness of the brand, and there was new money there as well. So there's some ideas around new fundraising events and how to pivot those traditional events if we are still around social distancing next year. So now let's look at warmth. Now, we believe it will continue to be high, as I said before, and how do we capitalize on that? So for me, this is all about making sure that we engage with our donors whilst they're in the mood to give. Now's not the time for charities to sort of be shying away about asking donors to become more involved while the warmth's still there. So it might be worth looking at your supporter journeys. What are you doing with your donors to move them on from a one-off transactional type event? So some event participants might be in this category, or perhaps someone who has bought something from your shop, if you have a shop. For the traditional one-off relationship, it'll also be about clever data capture, so you just don't lose that lead. So what creative ways can you capture someone's details so you don't lose them forever when there's, you know, such an appetite to do more? How can you incentivize that one-off person, you know, purchasing something in a shop to be part of your charity family? You know, could they be part of a monthly raffle, for example? They're happy to receive updates from you. So it might be worth thinking about those, you know, creative data capture techniques and focusing on that supporter journey, possibly using, you know, digital to automate it. And use data to understand how your donors are behaving to gain valuable insights into areas such as how they're giving and what they're responding to, because that might help your strategy moving forward. And lastly, wealth. As I said at the beginning, we predict an overall reduction in wealth next year, and this may be exacerbated further when furlough starts to wind up. And this may mean that fundraising teams, you know, are having to look at their portfolio much more stringently. For some aspects of fundraising that perhaps weren't, you know, really sustainable, but were hidden because cash flow looked healthier, they may come out of the woodwork if they haven't done so already. So a tried and tested model when reviewing your strategy, which we use quite often with our clients, is looking at things like the Boston Matrix, which I've put on the screen, which you may want to use if you're not using it already when looking at your fundraising mix, given everything we've talked about so far, and plot where everything sits. You know, what dead dogs you need to eliminate to keep going and thrive next year. And being mindful that next year that, you know, fundraising that relies on good access but doesn't tap into high income levels will be particularly difficult to maintain. So things like street collections and raffles at events, etc. So one thing I wanted to say really is when reviewing strategy, it's important sort of not to throw that baby out of the bathwater, so to speak. So don't be too hasty about dropping things. Which leads me nicely onto the next point about evaluating those somewhat sort of intangible benefits of income streams. So you're seeing their true value and you're not underselling your assets. So for example, you know, does a community event have an indirect benefit of upping your legacy pledges? Does a private dinner or an online private dinner help cultivate major donors that will go on and potentially give a major donation? Also thinking about redeploying staff where you see growth next year. So could you look at staff members, you know, moving into relationship driving roles, the one-off fundraising events, given what we know about warmth? Could they be looking at, you know, creative data capture, given access is high, that kind of things? Could someone who's dealing with logistics of a face-to-face event look at your social media campaign or your supporter journey? So really think about where you can use your staff that will create the maximum fundraising income for you, given what we know about wealth, warmth and access. And lastly, before we go to questions, and I guess ending on a positive note, there are, you know, a number of sectors out there that have done well out of the pandemic financially, who may have some wealth to spread around. So look for those and monitor those companies that are doing well and see how you can access them. So, you know, the sort of pharmaceutical, online shopping world, sort of courier services, those kind of things. We all know they've sort of done well over the last 8 months. So how can you access those kind of relationships either within your communities or within the corporate world that you have a supporter base in? So that's the end of my little bit. I hope that's been helpful. We are now going to open the floor to everyone here and hope to have a really rich conversation with you all. If you can use the Q&A to just place any questions, Dan and I will do our very best to answer them. We've got around about 15 minutes, so plenty of time to really get into a good conversation. And believe we've had a few questions posted already, which Dan is going to take forward while everyone thinks about anything they want to ask one of us in the next 15 minutes or so. Oh, I think you're on mute, Dan.
Yep, classic. There we go. While I also try and find the things on my screen, just one second. So I see Paul's put some questions in the box, which is great, but we had a couple of questions that came through by email. So I don't know whether Susan Crane is, I didn't check to see whether Susan Crane was listening at the moment, but Susan, you asked a couple of questions, I think really maybe coming from a trustee perspective and thinking about trust funding. The first question you had was around multi-year funding and if it's likely to return or not. And I think it's difficult to answer that fully. I think trusts are still some trusts have reconfigured and have worked out what they want to do moving forward. Other trusts are still in a sort of the crisis mode, responding to what charities need now, and are still very much focused on COVID. What we are seeing, I suppose, is for a number of trusts, they are changing the dynamic with the way that they work with charities. They are recognizing that maybe they need to have a greater level of trust with their beneficiaries, and that they can give them funding and allow their charities or their beneficiary charities to spend the money where it's most needed. They're also wanting to see those beneficiary charities being as robust and resilient as possible, and so grant makers that are able to give multi-year grants will obviously see that that gives a much stronger sustainability to the charity that's the recipient of their grants. So I think that it will continue. We really, though, have yet to see what the full impact of this crisis is on grant makers. Typically, there's a sort of an 18-month lag between when a crisis happens and when trust funding starts to perhaps decline before it starts to go back up again. So in the case of the graph that I showed earlier, that peak maybe goes on for longer before it starts to dip, and before it then ultimately goes up in terms of trust giving. So we're obviously sort of 9 months in. We're seeing lots of gifts at the moment, but those will start to go down as trusts that have been affected by the stock market changes have see the impact of that, and also the trusts that have given out perhaps much more than they would normally give out in response to the crisis also recognise that they need to pull back a little bit in order to manage their finances moving forwards. Susan's second question was around level of reserves that charities should have in order to attract funding. And what you asked, what is too little or what is too much? I think again it depends very much on the funder. Certainly, there's been sort of discussion amongst funders in terms of wanting to, or recognizing that charities with too low reserves are actually putting themselves and their beneficiaries at risk, and that's perhaps not good practice. And so they would hope that their charities that they're supporting have bigger reserves. That's certainly certainly one of the points of view that comes across from trusts. But then others would also see that they want to give where their donation is most needed and where it can have most impact, and maybe that's not where a charity is sitting on very large reserves. And I think maybe the balance there is that you need to demonstrate to funders that you are managing your reserves in an active and very present sort of way, that you're not just sticking with your reserves policy as it always has been, but you know what you need in terms of reserves at different points in time. You know your business model well, so you know what levels of reserves you need in order to remain robust and to not be in danger of not being able to continue to serve your beneficiaries moving forwards. And if you can convey that that sort of active management of your reserves policy to go out making trusts, they're likely to be more positive to you than if you don't do that. So Emma.
So we've had a couple of questions from Paul. So his first question is, which I'll start answering it, Dan, and then you can chip in.
Okay. You're welcome, Susan. Thank you.
His question is, I would like to know if the pandemic has changed the way organisations are now surveying and segmenting supporters following the pandemic. So I would say charities are segmenting, well, I guess they're re-evaluating their donors and checking whether the segment is correct, because lots of people's individual circumstances has changed. So I would say because of that, things are altering. I wouldn't say they're doing it in any different way. I just think for lots of people, their financial situation is different now compared to what it was maybe before COVID happened. I don't know if you've got anything to add to that, Dan.
I think one of the points that you made, Emma, in the warmth section was also talking about the importance of looking at the data that you've got as a charity, collecting as much data as you can on your donors, and using that data wisely in terms of thinking about donor behaviour and how that donor behaviour is changing, and therefore how you as a charity need to respond differently as a result of that. So yeah, that's again, that sort of ties in with keeping your case of support current as well, sort of responding to how people are interacting with your own case of support, and making sure that you're communicating that as effectively as possible, and that it talks about the needs that you have right now rather than the needs that you had a year ago when you were operating under completely different circumstances. So I'd encourage you all to keep a close eye on who your donors are and how they're behaving, and how you can nurture them as best as you can, because the donors that you have are much more valuable to you than the donors that you might get, but that you equally may not get.
Mm-hmm. And another question from Paul is just around the statistic I quoted around the people that have benefited versus the people that have lost out during the pandemic. He's just asked where that statistic has come from. I don't have the. Do you know who that? We can definitely come back to you, Paul.
Yeah, the original source we heard it on another webinar from the Wealth Research Organisation, Prospecting for Gold. Certainly the stats on who's benefited came from a calculation saying that about 2/5 of higher earning households have benefited from the pandemic, and that benefit may be because they've actually had less to spend their money on. So it's not necessarily that they've been earning more money, but the balance between the income that they are receiving, which is maybe fairly static, and the amount of money that they're spending means they've got more disposable income. And so I think sort of 2/5 is possibly even a prudent estimate of those sorts of people, and that works out at 3.4 million if you look at the number of high earning households there are, and the number of adults that there are within those households. So that was where that calculation came from. The 4.6 million who've negatively been impacted by the pandemic, I can find out, but I don't know for sure.
We can get back to Paul.
Yeah. Okay, Susan, I see, talks about legacy fundraising. We haven't mentioned that. Yes, it's so where to start. Legacy fundraising was an area that was doing well pre-pandemic. There's no reason why it shouldn't be continuing to do well post-pandemic or during the pandemic. The only caveat on that is that legacy fundraising has been challenged through so the operational issues of the pandemic, in that it's taking much longer for probate to come to a close. So even though legacies may be due to charities, then the money is arriving much later, and because of the courts not able to process legacies as quickly as you would hope that they would do. There will also be the knock-on impact of the recession on terms of value of people's estates, and the value of house prices, the value of equities, that's going to be affected by recession. But we did a webinar about 3 months ago, didn't we, Emma, on that?
Yeah,
and
I was going to say that we did a quite an extensive webinar. I think it was about 40 minutes. So we go into lots of detail on that webinar, Susan, and that's available on our website. So I'd encourage you to have a look at that. I mean, what we did say in the webinar, Dan, was around there is I guess an environment there connected to warmth again, around actually people don't mind being asked to give at the moment. So now would be the time to kind of continue with your legacy marketing campaign. And we actually had 3 fundraisers on the panel that were kind of pursuing with their legacy marketing campaigns, and doing quite well out of it. So the message was to sort of to continue doing that.
Certainly the indications maybe say that although the value of legacies to charities may go down over the next few years, the number of legacies that are likely to come in, even true. With just due to demographics and due to the fact that giving to charities through a legacy is continuing to increase in terms of popularity. Both those factors means that the total size of the pot that charities will receive through legacies should be rising, despite the crisis, and then will rise even more towards the end of this decade. I'm watching the time. We've got a few minutes just to cover off some last questions. So Martin has put another one in the quick Q&A. As a charity planning to invest in new donor acquisition pre-COVID that was pulled, any thoughts on how we invest in the new environment, whether timing or routes? Yes, interesting question. So first sort of response is that investment is certainly something that you should be considering, but careful investment, obviously. So we think that now isn't necessarily a time to pull back from fundraising. It's a time to continue to invest, investing in fundraisers and in investing in fundraising activities, because it's sort of more critically important to do so. In terms of new donor acquisition, that's always going to be harder than developing and nurturing your existing donors, and for the reasons that we talked about with respect to access, that's also going to be harder to do at the moment. However, some evidence from charities that we've been looking at sort of suggests that, and I guess it links back to the warmth areas that Emma was talking about, people do want to give. Maybe there's less new donor acquisition going on at the moment. Certainly some of the channels for new donor acquisition, using TV, for example, have been much cheaper, and as a result of COVID. So they're providing opportunities for charities that are able to get in there to do so, and even you know, other more traditional direct mail and other forms of or even door drops. Some of those have been more successful than charities were expected them to be. So I think there's a very strong message to keep on asking, to be wise about how you do that, but that lots of ways that you do try and ask will probably be successful, but it's all about what you ask, how you ask, your case of support, your articulation of that ask. Be current, be very real with people, be genuine, and charities that are doing that have been successful.
Yeah.
Anything to add on that, Emma?
I just think maybe when we did the survey around actually charities that are renewing their case for support regularly they seem to be faring well in terms of fundraising. So again, that kind of, it's back to that message around, if you're going to do a new donor appeal, it needs to be really relevant and current. That's what people want at the moment. So making sure that that is conveyed in your messaging is important.
Great. So it's now 5:15. I think we've dealt with the questions that the people had. If you have any more questions or queries, don't hesitate to get in touch with us by email, and you will be receiving an email about this this webinar tomorrow or Monday, with a link to the slides and to other resources that we've got as well. So thanks very much for joining us today. Looks like we have managed to get the chat to work. So thank you for those who've been filling that in. I don't know whether you're able to chat to all panelists and attendees so everyone can see your messages, but feel free to chat however. And we hope to see you certainly in the new year at some of the webinars that we're doing then, and possibly at the webinar that we're hoping to pull off in December as well. So thank you once again, and good luck with all your fundraising in 2021. And if we're able to be of help in any way, then do get in contact. We'd love to be able to get involved and to help you with that as well. So thank you.